So with reverse mortgages, there's the ethical best option and there's the compliant option that might be best for the company, not the customer. Which one's the right one for the customer? Which one's the right one for an originator building a business? We're excited to have here today Todd Walcott, who is a certified reverse mortgage professional, as well as another designation. I'm not even sure what it means, but what I do know about him is he's not only qualified, competent, but focused on making sure customers understand really what's best for them. Todd, thank you for joining us today. What is the difference between an ethical compliance and being in compliance?
First thing is like to talk about ethics itself, and the whole thing about certified reverse mortgage professional is we agree to a higher set of standards of ethics, and one of them, for example, is, they're really against churning. They're all about educating the clients. And there are actually only 208 of us in the country. So that's a number. But for me, big part of ethics is fully disclosing and being transparent. And so if you wanted to kind of pull up that first one, this is a typical, disclosure that I'll see that's part of the disclosure package that we do when we quote a loan. And this is what you're going to get from big box lender, where they're quoting the required 30-year fix, they're quoting the required 1-year annual, and then they're quoting a 1-year or a 1-month adjustable rate. And since your principal limit or your loan amount is simply a function of the age of the youngest borrower and the interest rate, we always end up going with the 1-year monthly adjustable. That's going to get you the biggest loan amount. It's going to be a line of credit that's going to grow. That's the one you're going to go to. However, with big box lenders, they're trying to make a number. And every company has whatever they need to make for however many bodies they need to support. And so they're going to show you.
Okay, hold on. Now, this is where you have to be political and I don't.
Yeah.
Because they're your colleagues and your competitors and you have to be friendly and you're in the industry. But I can say it as it is, which is big companies are focused on profits to their shareholders, not building a business based on their personal professional reputation, like those of us who have customers, i.e. I'm a real estate broker, Todd is a mortgage originator. And so he's not going to just make, what's the saying? Sheep get skinned, but pigs get slaughtered. You make a living by shearing a sheep once a year, which is healthy for it. But if you're killing pigs, as the big box lender, that's the term he's using.
Yep.
And I want to name names, like Rocket Mortgage. I don't want to name names of big companies that do that to their customers. But what happens is they don't care because their marketing is going to drive enough loans to replace their bad reputation. Whereas an originator like Todd has to not just do what's right for the customer because it's right, but he has to do it because that's his reputation going forward in the long run. Okay, so I'm off my soapbox. Now you can be back and be polite about it, Todd. Sorry, go ahead.
I just use big box to be polite. But the first thing that I always educate buyers on is the one number that is the most important number in a reverse mortgage transaction is the margin. And so a big box lender is going to just show you a margin. They're going to show you one which is going to be highly profitable to them. And in this case, the margin is 2 3/8. And that would actually be a really friendly margin for what I've seen big box lenders charge. Typically, I'll see a margin of 2.75, 2.5. And to give you an idea on that deal, if it's 100% funded, you're making 7 points on the back. An investor's
Whoa. 7 points on $300,000 is $21,000 commission.
And that's on the back. And that's not talking about the front. And the front is, set by FHA, or the ceiling is set by FHA, which is 2% of the first $200,000 of appraised value, 1% of the excess, up to a maximum of $6,000. And a lot of big box will charge the higher interest, they'll charge the higher margin, make the big back end, and they're going to charge you that $6,000 origination fee as well. And that is one way of doing business. You're supporting a lot of bodies. You're supporting, TV advertising. That does not come without a cost. So you've got a different way of doing business than when you work with, a smaller, set of originators, brokers, where I don't have to feed that many mouths, and I'm not doing, the TV advertising. More, most of my business and our business is CRMPs is referral.
So instead of paying Tom Selleck, you have me.
That's my favorite one is Tom Selleck Mortgage, but I don't want to be sued. So. And
I love Tom Selleck. He's a fellow Trojan, discovered at the gym where I used to play basketball. Great guy. But he's advertising for the dark side of the forest. So you can pay him and then get this loan, or what's the alternative a customer might face?
Alternative is page 2 of our disclosures, which is, and to me, this is ethics. This is part of like being fully transparent and showing clients that there isn't just one margin. There isn't just the one margin that big box lender showed you, which is very high. And so like as part of an ethical disclosure, I'll still show you the required. I'll still show you the 30-year fixed, the 1-year annual, and then I'm going to show you some options that are all going to be lower. So in this case, I did a margin of 2.125, 1.875, and then 1.625. And then I kind of included the bottom where if you go all the way to that bottom line, you'll kind of see that the lower the margin, and the margin is what we're adding to the 1-year treasury bill to determine your interest rate, the lower that margin, I'm not going to get as much on the back, because the investor is getting a lower interest rate. They're getting a lower yield. So you're going to probably pay the origination fee. But then as I increase that margin, I'm going to decrease that origination fee because again, I'm going to be making more money on the back. So I don't need to charge you $6,000 on the front if I'm originating a loan at 2 1/8. At 2 1/8 margin, I'll be fine, and you'll get a great deal. 2 1/8. I don't know that I've ever done one at 2 1/8. Because one thing is that when you kind of disclose and educate a buyer on how the margin affects their cost of borrowing. In this case, the principal limit's $327,000 in the first column, but you're saving, 0.5% in rate over the 2.125 margin.
Right.
All right, so that's $1,600 a year. So if you keep this loan for 4 years, then all of a sudden you're at $6,800 in extra interest you would pay at that higher rate, and so the lower margin is the one that makes sense. The lower margin also makes sense because again, your loan amount is a function of the interest rate or the expected rate in this case, which is the 10-year plus your margin. So the lower that interest rate, the higher your principal limit's going to be. So you'll kind of see that in that middle column where the margin is 2.125%, a borrower is only getting $308,000. I'm making a ton of money. And imagine if I were making that at 2 3/8 or 2 5/8 on the margin, which is big box, that's going to really curtail your principal limit. You're going to need to bring more money to the table on a purchase, or you're just not going to have as much money as a credit line if you're doing a refinance or if we're just setting up a credit line for to use as a hedge against retirement assets decline. So the lower the margin, the greater the limit. So in this case, you're looking at a principal limit of $327 with a margin of 1.65, which is going to be $20,000 more loan than if you didn't pay the origination fee and took the higher interest rate. And so like in this case, you're probably going to go with the lower one. You're probably going to pay the fee because that makes sense. But in this case, like I've educated you on why that's the option rather than just saying, here's your option. Here's the only interest rate. And margin are typically between 1.5 is about the lowest I've seen. And at 1.5, you're paying points. And I've seen margins as high as 3. Since we're at the high end of the yield curve where the 10-year treasury is in the mid 4s, we're seeing principal limits that are really low. So it's harder to make deals work when you have a high margin. If I started a low margin, you can get more deals to work. And so that's kind of why I like the lower end. But again, I don't have 5 mouths above me to feed. I don't have to pay top select. I don't need to charge, and make $40,000 on a reverse mortgage.
And I do this for free, by the way, for anybody who's asking. But I think there's a couple points here. This gets complicated, and we're talking in theory. If you're a borrower, Todd's going to work through your particular case, and you may or may not have a longer or shorter horizon, in which case one of the other options makes sense. But by disclosing it, you make the best choice. The second thing I know, based on my background as a mortgage lender, and I was a mortgage banker, and I was an executive for a company for a while. For those who don't know, the reason why the fees are different is the investors on Wall Street, the people whose job it is to take their customers' money, invest, and get a return. They're saying, well, if you pay me a higher margin, I'm going to make more money, but that loan's likely to pay off sooner because buyers will self-select. Those people who plan to be there forever want a lower margin. Those who want a higher margin are refinanced in a couple years, so I have to be careful with my money. And so there's a price structure that lenders get. But then lenders know, the actual mortgage companies know, that there's certain loan officers who are more greedy, and so they even charge a higher premium for the higher margins because while Wall Street gives them a higher amount, they may have a limited population that have those loans available. And so as the borrower, you're really paying a premium on a premium when you go that route. And I think there's no right or wrong loan. There's the right or wrong loan for you.
Yep.
Todd's job is to help you make that decision, or if you're a professional advisor working with one of Todd's clients, his job is to help arm you with the right decisions that you can advise your client. How's that for a summary?
That's a very good summary. And I think the key here is wherever you end up, educate yourself, like talk to more than one person to make sure that you're getting different viewpoints, different point of view. Because again, what I may think is the right one for you, maybe someone else may try and sell a higher product or a different product. For example, if this is a 2-year, 3-year loan, I'm probably not putting you into the FHA product. Maybe one of the conventional ones at a higher rate may actually be better because of that upfront cost of that 2% mortgage insurance. That's a number. That's a number we have to amortize. So.
Well, and if the case is, let's say you plan to sell in 2 years, maybe you want to move and retire to another state with no taxes or health issues or family issues, but you can't move yet, yeah, the higher margin might make sense because it lowers your costs. And again, it gets down to weighing those options out and being willing to look at those versus just making a phone call based on a handsome, is Tom Selleck more handsome than me? I just want to know. I guess he literally is a TV star and movie star, so I should be accepting that he is. Is it worth a customer paying $20,000 more over a 5-year period of their loan? Probably not, I don't think. I don't know. Most people wouldn't go for that.
So to give you an idea, the proprietary products typically have a margin of 6%, rather than my margin of under 2%. So you're paying 4 points more per year on that loan to offset a 2% FHA mortgage insurance premium. There's the math. And again, a 2-year loan, I would find another way to do it.
Yeah. Yeah. Okay. Well, and I think the other part is the thing about Todd that comes across is I see your CRMP, a CMPS, which to me the most important thing is that you've been educated and that you put yourself really on the line to educate people. So talk about what's the typical process, meaning if I am foolish enough to, I'm at home watching Oprah Winfrey, and I get an advertisement in between the 15 pharmaceutical ads, I get Tom Selleck telling me I need a reverse mortgage, and I call that number. I'm going to talk to somebody on the phone. Maybe they're in America, maybe they're not. And I imagine at some point, though, I'll see a human being, or maybe I won't. Maybe it's all online, or maybe it's all Zoom. If I talk to you, though, if I call Todd at toddwalcott.com or your phone number, yep. What's that look like? What's the process of consultation look like as a professional for you?
Especially with the population for this product is older. I'd say my typical client is late 60s, 70s, some into their 80s. And so, on the phone, you can do some. So for me, on the phone, we're getting kind of the basics so I can structure. Is the goal to pay off debt so that you can get by on your Social Security? Is the goal to set up an income stream so that you can, get by on your Social Security? But then from there, I would say 90% of the time we're doing an in-home consultation or at the office. A lot of these people don't like to drive or can't drive. I meet your kids, I'll talk to your financial planner. And so it's a lot more personal, than just on the phone, and I will come to your house and pick up documents and, some in my neighborhood or in my area, sometimes they want to go to a bar. And I'm like, I am all about gin and tonic and talking about a boring topic. But really it's kind of the first conversation is just overcoming all of the myths around the product where I'm going to take Nana's house and, we're going to kick someone out when one of you dies. We have to just get through that. That's one conversation. Right. Then it's like, I have to educate you on why, the opportunity cost of pulling money out of stocks to make your forward mortgage payment. I have to, kind of educate you that 3% note rate that sounds really good isn't, once you figure out that you're paying 30% taxes on that IRA distribution that you need to take out to make that payment. All of a sudden that 3% note rate is closer to 5%. So I'm educating you on different things that you aren't going to get from most of these call center originators. That they're not going to go that deep. And some of my clients don't want to go that deep. And I'll keep it shallow for you, and I'm like, if this is what we want to do, here's why this works. Here's why a tender payment works for you. Here's why we just need to get you, out of that first mortgage that's a forward mortgage payment, so your kids don't have to support you. It's kind of figuring out why you're here in the first place, and then kind of building from there. For example, signing the application package, which all of my clients appreciate. that's 2 hours, because like we're going to go over disclosures and we're going to explain some things to you, and
Oh, wow.
you're going to know this product,
Oh,
and
wow.
it's like no one's going to come back later and say, you didn't tell me this, or how did I not know that? Because I will over-educate you to the point where we're saying quiet. But that's this process. It's a slower process. You do your home buyer education. We have the cooling off period in California. So a week later, we're actually signing the application. During that week, we're like putting everything together, so we're ready to push play on day one of cooling off period. But it's a different process. It's a different animal, and I kind of prefer it because it's not so high paced. Where I'm in an escrow and I need to close in 21 days, and in this census, in this group of clients, that's just not the way they operate. So these loans take longer. You have to have more patience. You're answering the same questions. You're getting to know them more as people than you do in a forward mortgage, and so it's just a lot. I like this is just a lot more personal than what's your rate? What I need to close. That, which we have that. But
Well, I think there's two parts to your education. One is to get the customer comfortable to really even evaluating reverse mortgage as a tool, meaning even when they initially call, there is such a reputation that goes this product before the product that you're selling, what I call reverse mortgage 1.0, before it's all reformed. And I think that, out of habit, and I was one of those where people say, oh, I'm going to get a reverse mortgage. Wow, that's very expensive. Are you sure? Or you're going to lose the house or this or that. From somebody who's not educated. Somebody who was educated 20 years ago is really not educated because this is a different product today. So there's that education, which is what we're doing here today.
Yep.
And then there's really holding their hand through the process where they can make the right choice, which we talked about, and then through that, through the process of getting the loan and getting it at a pace they do. And that's why I think it's so important to have professionals rather than just a call center, because this is a very complicated process.
It's educators versus salespeople. It's kind of the thing. I agree. You call the wrong person, you're getting sold the product rather than educated on the product. And then we kind of do everything it takes to put that loan together. 100%.
One of my passions is that, and I have another podcast on estate planning, is that as a real estate salesperson, we should be much more involved in the discussion of, do you have an estate plan as evidenced by how you hold title to the property? Yeah. Mortgage originators, you kind of overlap that same thing. The hard part for a traditional mortgage lender, or forward to use that term, is that oftentimes by the time they're calling you, they're trying to get an escrow and you risk holding up the sale. And there's a lot to do in an estate plan. With a reverse mortgage, there's a little more time, but of course at the same time, people can be overwhelmed. I can see why you may not want to reduce that, because it's enough to get them from zero to the reverse mortgage done, yet we all understand the inherent advantages. So how do you offset the opportunity of sharing with people what will create value for them, as well as maybe introduce yourself or support a referral source, versus just overwhelming your customer? There's so much paperwork going on. Why would you want to add in a whole other notebook of papers?
So yeah, that is a very, you measure, but that is, you have to have a trust in California. The probate fees in my county, in the state, I think are set by statute. So you got $1 million house, I think you have a $22,000 probate by statute, or you can spend $3,000, $4,000 to get a trust put together. So we have that conversation 100% of the time, even if it's going to overwhelm them. I'll not talk about the counseling process. I will talk about getting the estate plan properly, because they're all talking about well, we want to pass this on to our kids, or we want to preserve value. And I'm like, well, that's the number one place you got to start. There's $20,000 off the top, so that is the conversation we always have. Sometimes we'll do it in the escrow. Sometimes it has to be done after. With the HUD changes, you can't change beneficiaries. We have to restate the trust basically. So that, a little technical there, but that would be a time where we maybe push post close. 100% of the time though, a trust or how they're vested is in this conversation. You have parents that are in title with their child. Well, you change how this ends when parents die, on a reverse mortgage, the heirs can purchase the property for 95% of the appraised value, or they can pay full price and keep the equity. But you lose that 95% option if the house is upside down when that other person is already in title. So we have title conversations, because that's going to affect what happens when there's a maturity event, as we call them. So
right. So having on title can affect their qualifying or not qualifying, and or the rate. Not having them on can affect the transfer of the property afterwards. So these are things, again, that are complicated. They're not simple. There's no right answer for everybody. There's a right answer for you, and the job is to talk to your reverse mortgage professional, maybe with your attorney, maybe your accountant, to get the right answer for you individually.
I always refer to like an estate planning attorney, 100% of the time. I'm not an attorney. I can't give you advice. I can tell you, you need one. And I would do it. So that is one of the conversations for sure. Yeah.
So when I started this, I think you and I talked about this previously, Todd, but for the sake of everybody who's watching this, when I started this podcast, I had a thesis, which is, as an industry, we should be doing 10 times the number of reverse mortgages than we are. We should be doing more people, instead of paying cash, should get a reverse mortgage on their purchase, if nothing else, just to have the money available. The people who have homes free and clear, like those people whose homes burned down in the Palisades, if they had a reverse mortgage, they could access that equity. Now they got to wait for the insurance company to pay off, and even that's a whole nother question mark. Right. And so I feel like we should do, my estimate is about 10 times as many as we do. In an industry that's really struggling, when you talk to particularly forward mortgage originators, real estate agents, and even reverse mortgage originators, they'll talk about how tough the market is because of the rising interest rates. Yet there seems to be such an untapped ocean of business. What do we do to make those opportunities available, both for our customers getting the service I think they need, as well as you and me to get more business? What do we have to do in order to reach out and effectuate that? Because we know that demand is there, really not being served.
The demand is there, and like you're kind of part of that process, by doing a podcast to kind of educate people. That's the biggest one. Welcome to the internet. Thank you, internet. That's a big one. Number two is, just as an originator, when I meet a new agent, like I'll educate them on the reverse mortgage process. That's reverse is most of my business. I've got 40 years of experience in lending, which means that I get a lot of tough deals that get turned down. We have a lot of leasehold in our market, which is unique. So I still get forward mortgage calls, but I'll just kind of take that conversation to reverse, because in Palm Springs, this is kind of our client of 62-year-old plus. So this is an option for them. And I always say, let me educate your buyer on this. We'll still probably do a forward, but they need to know about this product. The other one is for, as a company, Contempo, we're big locally in leasehold and pretty much reverse. And so we do a lot with the board of realtors to kind of get them educated. But I think it's kind of a multi-pronged approach. It's direct mail to existing clients. It's educating every new client, every new realtor that I come up against, and they're just doing kind of education opportunities through our realtor associations here in the Coachella Valley. So.
Okay, now I'm just a curious guy. Forgive me if it's too personal. I saw your background. It looked very clean, neat, and I assumed it was virtual, but I see a cat in the background. So either you have a great background with a distracting video, or this is a live picture and you actually have a cat. Which is it?
This is my house. So this is,
wow. Okay.
It's we have brick and mortar downtown, but it's a dark office, and so I work, most of the time I'm working from home because I'm driving to someone's house.
Well, wasn't that? I assume you're a house, and I'm in my house. It's a bedroom in my home. It was more is it virtual, or is that a fake cat in the background, or is that a real cat? Because your house looks too nice and neat and clean and freshly painted to be real.
And 10 times out of 10, that cat is here when he sees me on video. It's oh, I'm going to come up and visit. And so I'm surprised that she's over there and not here, because 100% of the time.
Well, I don't get along so well. I'm allergic to cats. So for me, maybe she kind of knows, and I will stay away. My nose appreciates that, so thank you so much. Okay. So education. So education, I think, is the key. And then also, what percentage of your business, again, if it's personal, I'm just a curious guy, so don't take it personal, and you tell me no. What percentage of your business is a direct-to-consumer, where it's a past client or friend of a friend, versus professional referrals, i.e. accountants, attorneys, estate planners, and those types, or fellow originators? And what's the mix of professionals that you get your business from?
It's 50-50. I'm part of a networking group. Oddly, just at the gym I go to, we are all 60-something in that age. And so people just get to know me as, oh, you do that. They know I'm an originator because everybody down here in Palm Springs is a realtor, a massage therapist, or a mortgage broker, so they know me as different.
Nobody thinks you're a weightlifter, I guess, huh?
Yeah, I was.
Oh, okay. There you go.
I used to bench 310. That's,
Oh, wow. That's legit. That's legit.
But at 60, you have to kind of like stop hurting yourself. Your body tells you no.
Okay.
So, but I would say it's 50-50. And, some of the originators that we had talked to at the latest conference, like, personal referrals are most of their business,
Right.
and in Palm Springs. And I think that is going to be where this goes. As I'm entering the age, I'll be 60 in a couple of months. So my sphere is all, 62 plus. So it's going to be more and more, it'll be more referrals.
So it seemed to me then, if your business is mostly referrals, mostly consumer referrals, i.e. friends, family, center of influence, that keeping in touch with them, both explaining what you do, because like nobody knows what you do. I don't know if this is your case, but in my case, like I was a lender when I started my career in 1986 until 2008. So for the last 17 years, I've been a full-time real estate broker. Nobody in my life knows I'm no longer a lender. I don't know why it is. I was like, are you kidding me? Yeah. I send out 1 million emails, Facebooks, LinkedIn, videos, YouTubes. I've got 7,000 followers on YouTube. I do videos every day. Nobody knows what I do. It's the most amazing thing. So what do you do? Obviously, you've been successful at it. What do you do to stay in front of the people you've met who today have no interest in any mortgage or any finance, but 2-3 years from now will? What do you do to stay in front of them so that when they have questions, they call you rather than, God forbid, the guy who's advertising on television?
The right for Tom Selleck, yeah. So,
and I love Tom Selleck. Don't get me wrong. I love Tom Selleck.
Henry Winkler,
yeah, big fan. Just don't like the service. Okay, go ahead. I'm sorry.
So, I just recently went through cancer treatment, and during cancer, it's like, okay, I'm asking myself these same questions. So, right after we recorded a set of 10 videos that we're editing, and then during cancer, I had a professional reverse mortgage page put together, worked on search engine optimization. So that is going to be segment one. And, and then we're going to start doing the videos to basically be, expert in class, to kind of present yourself that way, because to me, it's more, I'm going to be more of someone you come to because of my educationally,
right,
rather than you coming to me because I'm, pounding you with, you need to work with me. So that's going to be the main one, is just kind of education. It's like, I'm more of a soft sell, than an intro. I'm more of an introvert. So we do business a little bit differently. But
it's really important to you, just in preparing, and full disclosure, we did this interview a few months ago, and due to my technical incompetence, we lost the video. So we're reshooting this episode. And we've met before, we met in person. So, but one thing that's clear to me about you is it's really important to you that you come across as technically providing options to your customers. Like, it's really important that they know the options, that you really care about that. Everybody has something that's important to them, and that is to you. And that's where the education of the consumer comes in. So, congratulations. I think on behalf of the industry, thank you for making that. I never once heard you talk about maximizing your revenue or your service fee or your throughput of deals. I've always heard you talk about how do you make sure the customer gets the right deal.
It is, and it's kind of interesting. I'm also a court-appointed special advocate, and CASA, what we do is we advocate for kids in the foster care system in court.
Wow.
So kids have, mom's got an attorney, dad's got an attorney, kid's got an attorney, kid's got a social worker, but nobody ever asks, what does that kid want? And so that's CASA's, we are their voice, And so when I have the elevator speech with people, when I'm meeting them at a bar, because I don't want to go out and say I'm a reverse mortgage salesperson, that's an instant turnoff. I'll actually lead with CASA, and I'll explain that program to them. And then they're actually interested in talking to you, knowing that, you're not all about just selling them a product, that, I get to tell them what we do, to help foster care kids. And also, if CASA is a great program. Kids with CASAs are twice as likely to graduate high school. They are unlikely to end up in prison. 75% of our incarcerated have experience with the court system, and we keep them out of that. So it's a great program. So I lead with that, and then blend into reverse mortgage because if I can advocate for a kid in court, I can advocate for you, with an underwriter. So yeah.
So CASA's child advocate,
court appointed Court-appointed special advocates. Yeah.
Court-appointed special advocate. Wow. And I've seen them being in probate court. I've seen it on occasion. They're more common, I think, in family court or criminal court.
Family court.
Family court for sure, which I haven't spent a lot of time in, but a little bit, and I come across that. So, well, thank you for your service on that, because that's.
So it's going to be one of my videos of who am I, and part of it is gossip.
Endless. Talk about markets with an endless supply of customers potentially. That one, unfortunately, heartbreaking, is true. And so many of the CASAs are older and aging out of the business. There's very few people aspire to get into that and go into college and learn how to do it. So you're really feeling a need there that's probably never ending.
It's volunteer, and you're there. My sister-in-law did it, and she had her kid for 9.5 years.
Wow.
I don't think of breaking confidence, but my kid's 12. So
wow.
It could be a 9-year process. So
wow.
And that's what you're there for. You're in there for the long run. It's not to. If you want to feel good for a year, go walk dogs. Don't take on this role. You are the most stable person in this kid's life most of the time. So
I used to volunteer at Special Olympics when I was single, and then when I was married, we had a child, and we only had one. We tried to have more, and I always thought we may have a little extra room in my day to help somebody who doesn't have big brother, but I didn't want to deny my own daughter, and then she ended up getting married and then has kids. Now we have grandkids, so I kind of missed that. I waited a little too long there, but I really admire people who find ways in their heart to help children, whether their own or somebody else's, or all of our children, really. In your case, what you're doing, it's just. I've seen, unfortunately, like you mentioned, those who don't get support. It's not good.
Does not end well.
Yeah. Well, look, I don't want to end on a bummer here. Todd, I really appreciate your professionalism and standards as far as this business. If somebody wants more information, we have on the board here your name, your cell phone number, and that is your cell phone. Just by the way, I did the triple check myself. 760-808-4500. Such a good number that you got it on your cell.
Great number.
That's fantastic. And Todd at toddwalcott.com. And if you want to see the website, I think we had it up earlier, but my technical staff, that's me, a little soul in the draw. ToddWalcott.com brings you his Contempo lending page, and there's a handsome guy that's Todd, as well as his contact information, and a lot of great content on reverse mortgages and such to give you more. So Todd, thank you again on behalf of your work for the industry and your friendship and support of the podcast. I really appreciate it.
Great to be here. Great time.
And for the rest of you, I'm Bill Gross. This is our Reverse Mortgage Podcast. We get together every week with a new episode. We interview top producers, professionals. We really want to raise the standard of the service that the industry gets. And so turn in every week. We also have some managers, some vendors that help as well serve our customers in the field. I'm a real estate broker serving Los Angeles and California, probate and trust-related real estate. If I can help in any way, please reach out at Bill Gross Probate on all social media. Call, text, or email. If you have somebody that you think I should be interviewing, or you are somebody who should be interviewed, feel free to reach out as well. As always, make today your best day ever. Thanks so much.